Have you ever watched the market and felt like you had whiplash? Well, let me tell you about a single trading day, November 20th, that was the perfect story of the battle that's raging right now. It was a day that started with this incredible AI-fueled rocket launch and ended with a serious gravity check from the Federal Reserve. So let's get into it.
You know, the best way to describe what went down is a classic head fake. The market shot up right at the open, and everything looked like it was gearing up for another big run. But then, by the time the closing bell rang, poof, all those early gains were just gone. It left a lot of people scratching their heads wondering, wait, what just happened?
And what happened was a true tug-of-war. I mean, look at this. In one corner, you had this explosive, AI-powered rally getting everybody excited, but in the other corner, you had this nagging fear about the Fed that just dragged everything back down to earth. Let's break down both sides of this fight, starting with all that morning optimism.
So where did all that good energy come from in the first place? Well, it pretty much all started with one single company, the AI behemoth, Nvidia. Their latest earnings report was the spark that lit the whole fire.
The real engine behind that rally was just a massive revenue surge from the company. And we're not talking about a small beat here. This was a crystal clear signal that the demand for their AI chips and technology was just absolutely on fire. That news sent the stock, and yeah, the whole market, soaring right out of the gate.
And here's why that mattered so much to everybody. This wasn't just good news for Nvidia. The market saw this as a huge vote of confidence in the entire AI growth story. You know, that's the big narrative that's been pushing the market higher, and for a little while that morning, it felt absolutely unstoppable.
But you knew there was a but coming, right? That moment, that feeling, it didn't last. As the day went on, a completely different story started to take over. These bigger, broader economic fears, what we call macro fears, started to creep in, and that early optimism began to crack.
The key thing to understand is that it wasn't just one thing that caused the reversal. It was a combination, like a perfect storm of anxieties. You had investors getting nervous, again, about what the Federal Reserve might do next. People started worrying that stocks were just too expensive. And, a whole bunch of traders decided, hey, maybe it's a good time to sell and lock in some profits. All that stuff together created a weight that the morning's good news just couldn't hold up.
This whole vibe shift created what's known as a risk-off sentiment. And it's a simple idea, really. It's just a collective mood swing. All at once, investors decide they want less risk, so they start selling the stuff that feels risky, like high-flying tech stocks, and they go looking for safer places to put their cash. It's that psychological shift that really slammed the brakes on the market.
And this risk-off mood wasn't just a stock market thing. No way. It was like a ripple in a pond, spreading outwards and hitting a whole range of different investments. That fear was seriously contagious.
Which, of course, leads to the one question everybody was asking by the end of the day. In all of that selling, was there anywhere to hide? And if you look at the scoreboard, the answer was pretty much a flat no. U.S. stocks, measured by the S&P 500, dropped about 1%. But the pain was everywhere. Crude oil fell over 2%. Even gold, which is supposed to be a safe haven, ticked down. And yeah, crypto, like Bitcoin, felt the heat too. It just goes to show how widespread that move away from risk really was.
Okay, so after a roller coaster day like that, the big question is, what now? What does this clash between tech hype and macro fear mean for the road ahead?
Well, right now, the market kind of has a split personality. In the short term, there's a ton of caution out there. That uncertainty about the Fed has a lot of people feeling pretty bearish. But the long-term view is still really optimistic for many. That powerful AI growth story hasn't gone anywhere, which suggests that any of these short-term dips might just be seen as buying opportunities down the line.
And of course, it is absolutely crucial to remember that this is all for informational purposes. Our goal here is to break down what's happening and help you understand the dynamics, not to give you any kind of financial advice. Which leaves us with the final, and really the most critical question. That one day perfectly framed the central conflict that's driving the entire market. So in this ongoing battle for direction, which one wins? Will the incredible long-term promise of tech innovation overcome the immense power of the Federal Reserve? That is the multi-trillion-dollar question we're all waiting to see answered.